Guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, and we appreciate you checking in here yet again to our YouTube channel here of education and information in regards to the mortgage and real estate information. If you would do me a great honor and subscribe, we'd love to grow our channel here and get more individuals educated about any questions they have in regards to home lending, home mortgages, and or real estate, especially in the Omaha, Nebraska area. So today, what are we going to talk about? And the question is APR. What is APR and why does that differ from what your interest rate is? It used to be APR was a huge question that always was in conversation because when we would go through loan disclosures, there was a separate disclosure that had in really big bold letters what the APR is. And people would always get confused by that because they're looking and talking to lenders and getting quoted an interest rate. And usually they know, hey, my interest rate is what my payment is based upon, when generally speaking, your APR is another quote of a specific interest rate. And generally speaking, your APR is higher than your interest rate. And why is that? So people get confused as to why there's two sets of interest rates. And generally speaking, really what the lender is, or the government is trying to get the lender to educate to you or inform to you is what the true cost of money is. And that's what APR discloses to us is what is the true cost of the money that I'm borrowing. So to keep it very simple, and this is how I explain into all my classes, if you took out a loan and paid absolutely no closing costs or no loan fees, your APR and your interest rate are going to match each other. But what we do know in talking about other videos that we've put out, there's closing costs and there's taxes and there's insurance, there's mortgage insurance, there's points, there's underwriting fees. These fees are charged on top of just the interest that you pay. So because of you paying those extra fees, the government wants you to know that your cost of the loan that you're borrowing is more expensive than just what the interest rate is that you're paying. So if we think about that making sense, if we borrow $100,000 and our interest rate's at 6%, but our APR might be at 6.23, we know that there's extra closing costs on top of that $100,000, maybe $2,000. Not all closing costs and prepaids are factored into this APR. There's a specific law called the Truth in Lending Act that breaks down and RESPA what the different fees are that can be calculated as a finance charge that are calculated into your APR. Really, it's as simple as if you're borrowing $100,000 and the government says that there's $2,000 in fees, when we calculate out what your APR is, we use a financial calculator and we plug in $100,000 minus $2,000, and that comes up to $98,000. So what we're looking at for the formula is if your payment on the $100,000 loan was $700 and now you're borrowing $98,000, if your payment's still $700, what is your rate based upon that? That's the easiest way of understanding it. And so the rate has to be higher because you're borrowing less to keep the same payment. So obviously those are just very general numbers. We don't have the exact math to put it in front of you here, but like to keep it very rounded in regards to how APR is actually calculated. What the easiest way of comparing between a lender and another lender is to look at APR, because I know what happens generally speaking is consumers are always going for the lowest interest rate. Who wouldn't? That's the best thing generally for us all is a cheaper interest rate. But if that cheaper interest rate comes with $10,000 in extra fees, where maybe a lower or higher interest rate comes with only $2,000 in fees, how do you compare those two? And that's where APR comes into effect to make sure you're comparing the costs and the interest that you're paying on the loan in one number. And that's what APR is going to allow you to do. So when you're getting your interest rate quotes, you might want to ask your lender, what is the APR on that particular loan? You can also ask for a copy of the fees worksheet, or a loan estimate must be provided to you within 3 business days of application. On the loan estimate on page 3 is going to list out your APR. But a lot of times when lenders give you your fees worksheet or cost worksheet or estimate, it's only going to quote out the interest rate and not the APR itself. So if you're comparing lenders to lenders, you can go through every cost scenario. But the issue comes out is if there's certain numbers on there that one lender might not estimate properly and doesn't know, That's why we look at APR to APR, because that way you don't have to look at every itemized fee, which might be 30 or 40 items, to figure out why they differ. If you can contact the lender and look at their APR and the other lender's APR, that's going to allow you to compare two different loans at what the cost of the loan is over the entire life of the loan. A lot of times it comes down to, oh, this is your first year of costs. No, not true. It's the cost over the life of the loan. If you keep the loan for 2 months, that's the life of the loan. If you keep the loan for 30 years, that's the life of the loan. It depends on how long you're going to keep that loan. So where it gets very challenging is now when we're at higher interest rate markets and we expect rates to come down, what is the best loan scenario for you? And these markets ever change up, down, and we anticipate what rates are going to do in the future. But why again? What is APR? APR stands for annual percentage rate. And generally speaking, on all mortgage loans, it's going to be higher than your interest rate. I can assure you and tell you, lenders these days generally aren't quoting a large number for closing costs. But if you want to compare a true cost of your loan, always look for the annual percentage rate, APR. Because any lender that also has to quote or wants to quote out what the going rates are, they must quote APR in the same font or size as an interest rate. So it's very challenging when lenders will contact us asking, what's your going rate today? Well, the rate makes a difference, but the APR is the true way the government states we must advertise the interest rates out to our clients. I hope you learned a little bit today from APR. We're here at Mortgage Specialist to educate and make your process a seamless and stress-free one. Again, if you have a free minute, like to subscribe. We're here every week to give you our Mortgage Matters in minutes in a short, concise format, generally less than 10 minutes. Again, I'm Brent Rasmussen, your host of Mortgage Specialist. We'll see you all next week. Have a great one. Mortgage Specialists. Driven, trusted, reliable.